There's something really magnetic about celebrity finances, isn't there?
Oh, absolutely. The highs, the lows.
Yeah,
It's often a roller coaster.
exactly. And today we're really digging into the financial journey of, well, a true pop culture icon, Hulk Hogan.
A household name.
For sure. We've got some fascinating source material here looking at his wealth, his big real estate moves.
And some pretty dramatic shifts in that portfolio.
Yeah, and how major life events, really changed everything for him financially.
hmm
So, our goal today, our mission is to get past just the big headline numbers.
Right.
We want to unpack the why behind it all, look at his decisions, the context.
Understand the real estate markets he was dealing with, too. Those were volatile times.
Definitely. We're looking for those insights that make his story, well, a really compelling case study, I think.
It absolutely is, because it's not just about the dollars and cents, is it?
No.
It's what it tells us about managing, significant wealth
hmm
and the impact, sometimes the devastating impact
Yeah.
of personal stuff. And just how unpredictable asset values can be, especially like high-end real estate.
Hmm.
This dive should offer some really valuable takeaways.
Okay, let's jump in. So, the big picture first. What was Hulk Hogan's peak, financially speaking? Our sources point to around US $30 million before his divorce in 2008.
30 million. Okay. On the surface, a very healthy number.
Seems like it, for sure.
But, the first thing that jumps out from the sources is this contrast. Hogan himself apparently admitted to spending hundreds of millions back in the 90s.
Hundreds of millions. Wow, okay.
Yeah. So you hear hundreds of millions spent next to a peak net worth of 30 million.
Yeah.
It immediately makes you ask questions, right?
Like, where did it all go? Or how was the net worth calculated?
Exactly. It suggests maybe that his earnings were more about massive cash flow rather than building up a really solid, diversified asset base.
Ah, okay. High income, but maybe not translating proportionally into long-term wealth?
That's what it could imply. That kind of high-burn lifestyle without really strong asset accumulation alongside it can leave people quite vulnerable, even celebrities.
And speaking of vulnerable, you mentioned the 2008 divorce. This is where things get really dramatic, according to our sources.
A major turning point.
He lost a huge chunk of his assets in that settlement. The figure mentioned is 70% of his liquid holdings.
70%. And liquid holdings, just to clarify for everyone, that's the easy-to-access cash, stocks, bonds, the stuff you can convert quickly.
Right. Not tied up in, say, a huge house.
Exactly. Losing 70% of that, plus several business interests on top. That's a massive immediate hit.
It really underscores how fast a fortune can, well, evaporate, doesn't it?
It does. It shows it's not just market crashes,
Wow.
personal events, divorce, and the financial planning or lack thereof leading up to them. It can reshape everything.
It's not just earning, it's protecting.
Precisely. Managing and protecting wealth through life's twists and turns is the real challenge.
Okay, let's shift gears to maybe his most famous asset, the real estate. Specifically, that Belleair estate in Clearwater, Florida.
Ah, yes, the Hogan Knows Best house.
That's the one. Became almost a character on the show. He bought the property waterfront in Belleair back in '92 for US $2 million.
Right.
Then tore down the existing house and just went all out building this huge mansion. Finished it in '96.
And all out is probably an understatement.
Uh-huh. Yeah, the sources list 5 bedrooms, gym, tanning room. Yes, a tanning room.
Of course.
Wet bar, hot tub, massive pool with waterfalls, guest house, 2 docks.
The whole 9 yards. It really was the physical embodiment of the Hulk Hogan brand at that time.
Totally. But this Belleair mansion, it also represents a really dramatic financial turn, doesn't it?
Absolutely. And a bit of a cautionary tale, perhaps. This place, which he listed for, what was it, US $26 million in 2006?
26 million, yes. Staggering number.
It ended up selling in 2012 for just US $6.2 million.
Wow, that's an enormous drop, less than a quarter of the asking price just 6 years later.
Yeah. It's a massive depreciation. And you have to remember the context, right? The 2008 financial crisis hit luxury real estate incredibly hard.
Ah, good point. Timing.
Exactly. Properties like that, super customized, very specific taste, they can become almost impossible to shift in a downturn, or at least nowhere near the original asking price.
So the very things that made it unique might have made it harder to sell in a tough market?
Precisely. It's a lesson in asset liquidity and market timing, especially at that high end.
Okay, that makes a lot of sense. So, moving on from Belleair, his Clearwater real estate story continued, but it seems like a different chapter.
Hmm.
In 2012, the same year he finally sold the Belleair place, he bought another home in Clearwater. 5 bedrooms, built in 2009 for US $3.3 million.
Still a very nice property,
Oh,
obviously.
yeah. Had an elevator, fireplace, gym, home theater, another resort-style pool. Then, a few years later, 2016, he bought the property next door for US $1.6 million.
Interesting. Consolidating his space there.
Yeah, combining the lots, perhaps. And together, those two Clearwater properties now, the estimate is around US $11.5 million,
Okay.
which, for our listeners down under, is roughly a $17.4 million.
Right. So if you look at these more recent buys in their current value, it paints a picture of a much more, let's say, stable real estate portfolio.
Compared to the Belleair roller coaster, yeah.
Definitely. Still substantial, still luxurious, but perhaps more grounded in, current market values. Less susceptible to that kind of wild swing we saw before.
Maybe a different strategy. Or lessons learned.
It could well be. It suggests maybe a more measured approach to real estate investment this time around.
Okay, so let's bring it all together. The final figure our sources mention is his estimated net worth at the time of his passing, age 71. That was around US $25 million.
$25 million,
Right.
which is about a $37 million.
Right.
So think about that journey. Peak maybe around $30 million.
Right.
Then the huge hit from the divorce.
Right.
The admission of spending hundreds of millions earlier and ending up with an estimated $25 million. It shows resilience, doesn't it?
It really does. It's complex. Immense earning power, obviously.
Huge earning power, but also significant wealth destruction along the way.
Followed by some rebuilding or stabilization, it seems, particularly with that Clearwater real estate.
Exactly. It suggests that even after major setbacks, strategic moves and maybe a more conservative financial approach can help maintain or rebuild substantial wealth.
So let's boil this down. For you listening, what are the key takeaways here from our sources?
Well, first, Hogan's net worth clearly took a major hit from the divorce and those earlier admitted high-spending years. It really hammers home the need for, protecting the wealth you make.
Definitely. And second, like iconic Belleair Mansion, a dramatic example of real estate risk, right? Listed at $26 million, sold for just $6.2 million 6 years later.
A huge lesson in market timing and the potential downsides of highly specialized luxury assets.
But then third, his later Clearwater real estate moves seem more stable, now estimated around $11.5 million. It shows a path to reestablishing assets.
A strategic regrouping, perhaps,
Sure.
which lead to a bigger question, I think.
Okay.
When we look at these public figures, these huge fortunes, how much of the story is just about making the money? And how much is actually about the maybe harder part of keeping it, preserving it, adapting when life throws curveballs as the market shifts?
That's a great point. Accumulation versus preservation.
Yeah. What does this whole dive into Hogan's finances tell you about maybe the true cost of a certain kind of lifestyle? Or the resilience and maybe the strategic shifts needed to manage wealth through thick and thin?
Really interesting things to ponder as you think about your own financial picture. Thanks so much for joining us on this deep dive today.